Is this the kind of volatility you have expected? I mean, it seemed like so many people were getting on the crypto and the blockchain bandwagon uh, for some time. Was this expected?
Yeah, I think those of us in the space were very surprised at how quickly Bitcoin went up in price, especially in just the last month of last year. It went from 10,000 around Thanksgiving to over 20,000 before retreating a little bit, and it started the year at 1,000. So it was a lot of new money from all over the world coming into the sector, and a lot of folks that hadn't seen downturns in the currency before. I mean, there were 30% declines in 2017 alone. I started investing in the sector in 2013, and we've certainly seen 90% declines during that time. So it's a lot of new money that came in just that expected it to keep going up.
Lou, if we can sort of make the extrapolation to stock trading, I mean, that's sort of, where you began your career on the equity side of things. You have weak hands. And maybe some of the weak hands are being shaken out right now, but without those incremental buyers in the future, if they got burned and they're feeling pretty lousy about buying at 17 or 18,000 and taking the ride down, they might never come back. So what is that driver back to new highs?
Sure. Well, as Jalak said, we've seen this before. It's been down 71% in one night. So anytime you have a new asset, like when the internet first came around in the 90s, there was extraordinary volatility there. Amazon, arguably the greatest company in the history of the planet, was down 95% over a couple years. So anytime you have a new asset like this, you get this kind of volatility, and that's why anybody who's been in the space for a while considers themselves hodlers. We don't hold in crypto, we hodl, which means we hold on for dear life because it's a wild ride.
Yeah, hodl is that term that crypto investors use to hold, back when there was a typo made when it said just hold it. Jalak, I'll go back to you. You're an investor in blockchain technologies, and so I'm wondering, we've got the advent today of two blockchain ETFs, one that's actively traded ETF, one that's a passively managed ETF. Is it simply too early for an investor to invest in publicly traded companies with the hope that they're going to get blockchain exposure?
Yeah, I think it is very early. I mean, we certainly have certain companies like semiconductor companies that have been providing technology and processing power that enables the processing behind Bitcoin and other cryptocurrencies to occur so that they can be mined and issued. But we're in 1994 and 1995 internet. So, if you think about investing in Amazon back then or other companies and the internet, it was a long ride before they really fulfilled their potential and had long-term sustainable gains. And so, I think there's obviously long-term potential. Future Perfect Ventures, my venture fund, has been focused on investing exclusively in the space since 2013. We're seeing great movement in the underlying technology, and it's happening a lot faster than I had even anticipated, but it's not for the short-term investor.
Well, you can say that again, Lou. I guess. Is this, you likened it to internet stocks back in the late 90s, Amazon, and you must have others in mind too. But are these cryptocurrencies destined to do what those internet stocks did? On the one hand, a lot of them went away and just disappeared. And then a lot of them matured and morphed and became the Amazons of today. What's going to happen here, or are these cryptocurrencies destined to be perpetually as volatile as they are today?
No, I think we've seen this movie before, again, with the internet. And you are going to see the exact same thing. A lot of us in crypto referred to this as a Cambrian explosion. A short time ago, there were no crypto companies, and today there are thousands, and next month there are going to be tens of thousands. And the majority of them will probably fail. But the ones that the ones that are successful are going to be the next Facebooks and Googles of the next generation.